live stream ಆಗಿದೆ.
Mute open this time.
Hey, YouTube live la.
Vedavali, can we start?
Yeah. Is Deepa Madhav, ma'am? Is there? I think you are in mute.
Welcome, C. Ramakrishnan, sir.
Thanks.
You are not audible. Your voice is a little feeble.
Thank you, ma'am. Is it fine now? Am I audible now?
It is fine. Yeah, you are audible. Deepa, ma'am, can we start?
Yes. Good evening.
Good evening.
Yeah, good evening.
You can start, Vedavali.
Yeah. Good evening, young students and members. I welcome you all to this knowledge enhancement session on TDS portal on behalf of the Students Committee of the Chengalpet branch of XIRC. I once again request all the students to have this session as with open mind and get all your doubts clarified, because we have the very good eminent speakers to give to share their knowledge on this TDS portal. So request all the students fraternity to just use this session as your enhancement for your enhancement of knowledge. And before we move on to the topic, I request Deepa Rao ma'am to give a prelude on what are the upcoming events for the students fraternity. Over to you, ma'am.
Thank you. Good evening, dear students. It's very nice to see the various programs by our institute. They are organizing a set of programs for your benefit. Please do avail the various options available and benefit from the programs. The programs are actually, you have on June 11th a program on basics of valuation by C.A. Sandeep Kothari, and also another program by Satya Yanmantram on personal finance and savings. This is on June 11th from 3 to 6 in the evening. Again, on June 25th, you have another program by C.A. Rekha Pillai, our RCM. She is conducting a speech on AAS. So please do come and avail these technical sessions and benefit from these. Apart from this, we are also conducting various indoor and outdoor programs for your, activities for you. This is on June 18th and 19th. So you will be provided with all the details. Kindly to participate, make it more eventful and fun. We are also having our regular newsletters published on a monthly basis. So we seek we seek articles from students. It could be even funny incidents from your articleship days, from your office, or things which could probably be something of an entertainment value also. So kindly do participate in contributing articles as well. All the very best to you all. Over to the program now.
1 minute. Those of you who have registered and who have not got the link, in case you want to share it with your friends, I have posted the link in the chat box. In case friends who have not got the user ID and the link for the Zoom meeting, kindly share with them. Okay, over to Mahata. Mahata, Aishwarya?
Shruti will introduce the speaker, ma'am. Shruti?
Yes, Mahata. Am I audible?
Yeah, yeah.
Ramakrishnan B, who completed CA in the year 2017 and is into practice since then. His area of specialization is internal audit and bank audit. He is also a financial market enthusiast who loves to travel. I welcome you, sir. Over to you.
Thank you. Good afternoon, friends. It's pleasure meeting you all in this virtual connect. And let us begin the seminar on effective use of TDS portal. Before I begin, I just want to know, can I continue in English or half English and Tamil, or how you prefer?
English and Tamil.
So English and Tamil, we have one reply. Mix of both.
I don't think everyone will be able to understand Tamil fully. So kindly take care, sir.
Okay, fine. Then I'll proceed with English only.
1 or 2 words in Tamil, that's okay.
Yeah.
You can proceed 90% English.
Yeah, okay. Fine. Then we will go to the topic then. I'm not able to share my screen.
We are able to see the screen, sir.
Yeah, okay, fine. So I'll start with TDS. So what is a TDS? TDS is tax deducted at source. This is done when the person who is going to pay the money to the other person, he deducts tax upon satisfying some conditions. This will be as per the Income Tax Act. So, for example, if the employer pays the employee salary and the basic exemption limit, as everyone know, it is 2,50,000 per annum. So once that amount exceeds on any month or before any date during that particular financial year, then TDS has to be deducted. So this is how the TDS works. This has to be done on a monthly basis. TDS has to be deducted on a monthly basis, and this deduction has to be filed by way of return on a quarterly basis, which we will be seeing in the coming slides. Now, these are TDS. There are various sections under which tax has to be deducted and at different rates. For example, for salary, as you all are aware, under the recent notification, it is up to 2,50,000. There is no tax. After 2,50,000 till 5 lakhs, the tax rate is 5%. However, there is a rebate for the first till 5%. Then once it exceeds the 5 lakhs, then it goes on like 10%, 15%, 20%, and up to 30%. So this will be based on the slab rates that is fixed by the Finance Act in the budgets. Then there is another section. So these are all the sections where TDS is deducted for various heads of income. If someone is receiving dividend, so dividend, then if the yearly dividend is more than 5,000 from one company, then that company deducts TDS at 10% on the amount paid. So these are all the various sections through which the TDS is deducted based on the amount that is being paid. 194C is a common section where contractors are engaged. When a company or or a person engages a contractor and the aggregate value exceeds 1 lakh or 30,000, then TDS has to be deducted. If the person who is providing the contract is an individual or HUF, then TDS is deducted at 1%. If he is a person other than individual or HUF, then it is deducted at 2%. Then 194H. 194H is a TDS which is deducted on commission or brokerage. So if the commission or brokerage paid by the company or any other person during that financial year exceeds rupees 15,000, then TDS is deducted at 5%. 194I is on rent. If the company or any person who takes anything on rent, then for that also TDS is there, and TDS has to be deducted at the specified percentage. If the company or the person pays rent for plant or machinery and the aggregate value paid during that financial year exceeds 2,40,000, then TDS has to be deducted at 2%. If it is for land, building, furniture or fitting, then TDS has to be deducted at 10%. Then 194IA is on property or TDS that has to be deducted on immovable property. If the immovable property, then immovable property. If the value of immovable property exceeds rupees 50 lakhs, then 1% TDS has to be deducted. Then 194J is for professionals and other than professionals. So once the professional payment exceeds rupees 30,000, then it has to be deducted at 10%. For any other person other than professional who provides technical services, then TDS has to be deducted at 2%. Now we will move on how this TDS has to be paid after deducting. This probably we will have a practical example. This is the page where TDS are being remitted to the department on or before 7th of every subsequent month, where the person who deducts the TDS has to remit to the government. There are various challans, but for deduction of TDS, challan 281 is being followed. Here there are two assessees. One is company deductees and the other is non-company deductees. Company deductees are those like private limited company, public company, those select company deductees. Others select non-company deductees. Now, for example, I'll just take as company deductees. Now, the next thing is TDS or TCS payable by taxpayers. Now, as the remittance is going to happen, the person who is going to pay the TDS has to give it in TDS. That is, he has to select 200. Now, the next comes the nature of payment. Here, there is a list of drop downs where you will see under what head the TDS remittance is going to happen. As we discussed in the earlier slide, we saw TDS is deducted under various heads, that is 192B, 194A for interest on securities, 194C for contractors, 194I for rent, so on and so forth. So for the sake of just understanding, I'll just take it as 192B, where the salary we deduct TDS on salaries, and that remittance is happening. The next comes the mode of payment, where the net banking or debit card is being used. We cannot pay any mode other than net banking or debit card. However, there are few things where the banks accept, for which a physical challan has to be prepared and given to the bank. Here, if we select the net banking, we have to select through which bank we are going to remit. For example, I'm just taking ICICI Bank. Now, the TAN number of the assessee has to be given. This is the TAN number which the company or the person who deducts the tax will be having. So I'll just fill the TAN number of a person. The next comes the assessment year. The assessment year can be for any year, even for the previous years also we can pay. For easier sake, I'll just take this year. After filling all these details, if we click proceed, it will take to the next page. This is a confirmation page where we will know the details that we have filled in the previous page. So this will here, this is the place where the company or the person who is going to pay the tax, who is going to pay the TDS, will reflect. We can cross verify this name with the name of the person who is going to remit the TDS. Once we submit, this will take to the branch to the bank page to which we are going to pay. The bank site is not working, so I'll use some other bank.
You can skip the payment part, sir. You can you have explained maximum. So
okay. So once we give that, there will be a challan. There will be. I'll just show you the thing. Yeah. So after landing to that bank page, this will be the selected portion will be the page which we will land on. Here we will have to mention what is the tax amount that we are going to pay, and if there is any interest that has to be paid, that should also be mentioned. Once that is mentioned, there will be an acknowledgement. This is the acknowledgement copy which we get from the bank once the TDS is paid. So once this is done, the first part of deducting TDS and remitting to the government on or before 7th of next month is over. So once this is done, the first step is over. Now we will see what is the responsibility of the company and the other person who has to give this, what is their responsibility. For the company has to obtain TAN and mention the same in all documents. This is necessary for all the companies who are going to deduct TDS, because without TAN, TDS cannot be remitted. TDS, whatever has been remitted, cannot be filed as a return. Once the TDS is deducted at specified rate, and also the same has to be remitted by the company to the government on or before the due date. If that is not going to be done by the company, then they will have to face penal provisions, and they have to pay heavy fines. Once the company files the TDS, remits the TDS, they have to file TDS returns on a quarterly basis, so as to give credits to the person for whom they have deducted the money. Once the TDS returns are filed, they will be getting TDS, they will be issuing TDS certificates, which is an acknowledgement copy for the person from whom that amount has been deducted. This is the responsibility for a company who deducts TDS. Now we will see what is the responsibility of the person to whom the TDS has to be deducted. The person who gives, for whom the TDS is being deducted, should furnish proper PAN number to the person who is going to deduct. So they have to give the valid PAN number with appropriate details to the person who is going to deduct the TDS. Once they give that PAN number, they should make sure that they are giving all the required documents that is required for deducting the TDS. For example, we will see for if the employee is going to give the details to his employer, so he has to give his proper PAN number. Then he has to make sure that all incomes other than salary is also being properly disclosed to the employer, so that the employer deducts appropriate TDS and remits to the government. Once that is being made, the employee also should give proper declarations for all the incomes and also the TDS and also the deductions that he is going to claim while filing his annual return. Then last step is he has to make sure that while the employee is going to issue TDS certificates, he has to ensure that the proper deductions, his PAN number, his name, everything is being mentioned properly, and proper tax credit has come to his account. Now we will see how salary TDS or TDS returns is being done. So for filing the TDS returns, we have to download return preparation utility file from TIN NSDL site. So here, if we go to the downloads TIN NSDL site, there will be a tab called downloads. From there, if we go to the TDS tab, there will be something called TDS quarterly returns. Here, if we go, there will be something called regular. So if we click that, these are all the things that will be coming. So these are all the various versions that will be available in the portal. We have to select the recent preparation utility for filing the returns. This preparation utility will be updated on a regular basis by the department. So this is the return preparation utility which we will be downloading. For convenience sake, I have already downloaded that. Now we will see how we are going to file the returns. So this is the return preparation utility. We will see. So form 26Q is being selected for filing TDS returns on salary. So this is the first page of the TDS return preparation utility, where we see the section as section 192. So section 192 is TDS on salaries. So we are going to file that. So these are all the details that are to be mandatorily given while preparing this utility. The TAN number, which was mentioned, and the financial year. This is the place where we are going to mention for which year we are going to select. We are going to file the return. After doing this, this quarter has to be selected, so that for that quarter we are going to prepare the returns. Then PAN number of the person has to be mentioned. Then comes the type of deductor. This will have different types: firm, individual, body of individuals, artificial judicial person. So everything will be there. Now I'm going to select company. Scrolling down, the details of the deductor or the employer has to be filled. So here the name of the company has to be given. If the company has any branch, that has to be given. So I'm taking nil because I'm assuming that this company is not having any branch. Then the address details of the company has to be given in full. Then comes the last thing, where the person who is going to issue the certificate, his detail has to be given. Here, the name of the person who is going to issue the certificate has to be mentioned. The next, his designation has to be mentioned. Then his PAN number should also be mentioned. Once these three things are mentioned, then the address of the company should also be mentioned. Then the mobile number has to be mentioned. So these are all the mandatory things that has to be filled in the first page. Now comes the next page, challan details. Now this is the challan details that will be filled by us by seeing the challan numbers that has been given by the client to us. So here, as I have already shown to you, I'll just reopen the file again. So this is the challan that gets generated once we file the TDS payment, once we do the PTDS payment. So this details has to be mentioned there. So here in this challan tab, we have to mention the TDS amount. We have to mention the interest amount, which we have given in this challan, income tax amount and the interest amount. So after filling these two, we have to give the BSR code for this challan, which will be mentioned here. Then the date on which the challan is being paid, then challan serial number. That's all. So this has to be mentioned in this tab. Now we go to the next tab, where we fill the details of the persons to whom we have deducted the tax. For example, I've just given only one assessee, only one person for whom the tax is being deducted. So here, these details will be automatically pre-filled from the previous tab, that is from this challan tab. So here we give only these details, that is the PAN for whom we have deducted the TDS, his name, and date on which the payment is being made, that is on which date we have paid to this person and what is the amount that we have paid. Also, we will also give what is the amount that has been deducted against this payment that is being made. So this is the details that we will be giving here. Then comes the next page where this is nothing but the breakup of entire form 16. Here I would like to pause for a second and go to the first page. Now I have changed here now I have changed the financial year and for Q1. Now we don't see the next tab, the other tab where we are going to fill the salary details. So if we are going to file the return, for the last quarter, then this sheet, salary details annexure 2, acts as a this is the data where we give all the form 16 details here. So here we give the PAN of the employee, then name of the employee, if whether he is a senior citizen or not, we give here. Then here comes the financial year from when to when the employee is being employed. So once this is being given, then we go and give the salary details. This income, that is the total income, the total taxable income that comes here is an auto-populated figure which will be filled automatically. And these two figures, that is the income on total tax and the education cess, has to be calculated by us and should be filled here. So this is the first figure which we will fill in this salary details annexure 2. What is the gross salary that the person receives during the financial year? So this is the total amount that we give before giving any deductions. So once this amount is filled, then comes the other things where profit in lieu of salary, if any, is being paid to the employee, then that will come. Then any gratuity, then pension, if anything, those details will be given. So this will act as a typical data sheet where we enter all the particulars that has to be reflected in form 16 will be filled in here. Now, once we fill these things, once we fill up to this thing, that is the total exemption claimed under section 10. Once we fill up to this thing, the entire salary structure gets over. From here, from the next column comes the ATC deductions. If the employee claims any deduction that he has paid towards ATC, that is LIC, PPF, fixed deposit, anything, then those details has to be filled here. Here, the data sheet entry gives in such a manner that if suppose the total amount of ATC deduction that is claimed by the employee is 2 lakh rupees, but the maximum amount that can be allowed is 1,50,000 only. So we can fill only 1,50,000. We cannot fill any amount that is over and above the limit specified. So based on this, the based on each and every section, concerned amount which the employee or the person has paid, and what is the maximum amount that is allowed. So that has to be filled. Once this is fully filled, this sheet gets over, and as a part of counter checking, we have to ensure that this column, the shortfall in deduction or excess amount in deduction, is nullified. The reason being, if there is any shortfall in deduction, there will be, for example, if I'm going to change the figure here. If I give here, then this amount becomes 928, where there is a shortfall in deduction. Suppose if I'm going to put it as 75,000, then this becomes negative, which is a refund that the employee has to get while filing his TDS return, while filing his income tax return. So once this is being done, this forms the basis of Form 16. So once this is being done, we save the data and we give it as create file. So once create file, if there is any error that is there in the sheet, this will throw up. For example, if I'm going to delete this column, which is mandatory, this will pop up a message like this: to date should not be empty at row 1. So this will give a error message where the mandatory item that has to be filled is not done. So once a dialog box like this comes, we can ensure that there is no error in the form. Now, before proceeding further, we have to see that the challan that is used for this, the challan that is being used here for remitting is properly matched with this challan. For that, there is a separate thing called challan serial number verification. We'll go to that. So this is the Voltas application, which is available online, where we will verify whether the challan that is given for filing the return is correct. There are two things. One is sin-based view, the other is tan-based view. In the sin-based view, if we enter this will be based on challan. So here we have to enter the details that is available with us for the challan. So I'll enter these things. Challan. We have to give the entire amount that has been paid for the challan and not the TDS amount alone. So this challan has been matched. Here we get a confirmation that amount has been matched. Now we can ensure that the challan that has been taken is correct. Now, in this create file, we have to give the challan serial verification number file so that the system automatically matches the challan that is filled in this tab of challan with the challan available online. For that, we have to download this file that is based. We have to enter tan-based view. Here we have to enter the TAN number of the person for whom the tax has been deducted. Then the challan tender date has to be given and everything has to be given. I'm just having a screenshot of the thing. So this is how we will get the challan numbers, challan CSV file that we will be getting. So now if you see here, This is the challan number which we took, and this is the date on which the thing has been remitted. So if you see, this is the challan number, challan serial number, and this is the date on which the challan has been remitted. Now here we have to enter the amount. We have to enter the amount here, and we have to check this box, and we have to click the download file. Once this is done, the challan serial verification file will be downloaded, and this will be saved here in this format, CSI format. Now, after saving that, if we select this create file, we will get this one, 3 dialog boxes, where the first one will be the challan serial number that has to be uploaded. So this is the file that we have to upload here. Once this is done, we have to give a path where the error, if there is any error that is there in this form, will be saved. So that also we have to give. So once this is done, if we click this validate file, we will get a file. We will get the file generated. If there is any error, that will be saved in this path. If there is no error, there will be an FUV file that will be generated, and the form 27A that will be generated in this format. So this is the 27A format that will be generated. Here, this will have all the details that will be given in the return preparation utility. So you can verify that TAN number is mentioned, then permanent account number of the assessee is also mentioned, then financial year and assessment year, and the form type 24Q is also mentioned. Also, you can verify that Q4 is also there, for which we are filing the return. So this will have the name of the company, the address details, phone number, email, everything. Here we can have a cross verification that this is having how many entries or how many deductees or for how many persons we have deducted tax, and what is the amount for which we have been deducted. Also, we have given the details here. This will show the person who is going to issue the certificate. Once this file gets generated, along with this, we will have another file, another FUV file like this in this format, FUV format. So this FUV format and this 27A, these two should be used for filing the returns. If the person who is going to file the return has digital signature with him, then he can do the filing himself. Else, there are some intermediaries like integrated who will help us in filing these returns. So for them, we will have to give both this FUV file and this form 27A in a printed form, so that they will file the returns and give us the acknowledgement copy. Now there are some practical difficulties where we are having the practical difficulties in filing this return. Suppose if the assessee or if the person is having some rebates, and if we don't give that rebate in this column, in this rebate under section 87A, if we don't give that, then the return that we file gets bounced and we get notice for that. So these are all some practical difficulties that we find, and that is not that we have to be very careful while filing these returns. So I think so this is basically the filing of TDS returns, and That's all.
Thank you, C. Ramakrishnan.
Thanks.
You can stop the screen sharing.
Yeah.
Thank you so much for your wonderful session.
Thanks.
It was indeed very practical and down-to-earth approach for our students. Thank you so much. Now I request Mahata to introduce the next speaker for the day.
Thank you, sir. It was very useful for us. I think it will be very useful for the ones who are filing it at present, like 31st is the due date. So thank you very much, sir. Now I'd like to introduce CA Anand, our next speaker. Anand sir is partner in Anand & Co Chartered Accountants, Chennai. He has completed his articleship training under CAG Narayanaswamy, who has been partner in S. Venkatraman & Co Chennai. He is presently managing committee member in Chengalpet district branch of SARC of ICA. He is also advanced ITT faculty in Chengalpet district branch. He is in practice for more than a decade and had handled the audit of corporates, non-corporates in the field of taxation, central statutory audit of banks, audit of educational institutions and trusts. He has presented papers in Tambaram CP Study Circle, Hindustan Chamber of Commerce, Tinagar Westmamblam Study Circle, Kanchipuram district branch of SARC, various private educational institutions like schools and colleges. He also holds a master degree in business administration in international taxation. Over to you, sir. We are so glad to have you here.
Good evening, one and all. Thank you for your nice introduction, Rebecca. Before going into the topic today is somewhat
some more louder or voice clear.
Is it audible now?
Yes, sir.
Or you need to be even more louder?
That is okay, sir. We'll be able to.
Fine. And before going into the topic, can I have a small feedback from all you? How many of you have filed the TDS returns?
You can even type it in the chat box.
You can type in chat box, or you can raise your hands in reactions. Can I assume that only, except few others, are not filed TDS returns? Yes, those who have filed the TDS return and those who have been filing TDS return for more than a decade or so always feel that it is a tedious process. Let us see whether a tedious filing is a tedious process or a simple process. Just a glimpse of things. Most of things have been covered by Mr. Ramakrishnan. Thank you for the nice intro of various sections and other things. And whenever any student or any person who is touching a subject like TDS needs to be thoroughly understood what are all the basic sections which covers and what are all the implications of each sections and what is the requirement as per the law. That is foremost important. When it comes to the number of sections and the number of provisions that cover, it is almost 80 plus sections that covers the various deductions. And if you see in a more focused manner, it seems to be a very large area, and things to remember will be much higher like that, but it is not so. If you break it up and study in a methodological manner, the TDS sections are very simple and very clear. You should understand the basic principles in which the department is asking us to deduct TDS. The various sections 192, 193, 194, 195, 196, 206. I am also covering the tax collected at source. All these sections are charging sections for TDS, and every section has some subsections and so forth. So whenever we call it TDS, remember in international parlance, it is called as withholding tax. So almost most of the countries have withholding tax. We call that as a tax deducted source. And being students, kindly correlate whatever the terminologies, tax terminologies or anything, any terminology we use in Indian scenario. Try to learn what is the similar synonym or similar name is used in international parlance also, so that it will be useful for you when you interact with international clients or when you go abroad and for a job, no, then it will be easier for us. Most of the things are common, only names only will change. Even when it comes to accounting standards, what we studied at earlier years and the changes that hasn't happened, most of the things, the principles are same and the names are getting changed. So kindly updates the terminology so that you will be updated in the way when you present. The others will know that you are intact in the subject. This is what it happens when it comes to TDS. So you have your PISA, which is your earnings. Before you take your share, the department takes the tax share. So this is why before I am earning something, department is trying to get the tax out of my profit. When you see in a limited perspective, it seems to be something they are stealing away from us, but it is not so. So when the taxation law is introduced where the TDS provisions are very, very minimal or there is no TDS provisions, there were advanced taxes, the government needs to run on taxes. As the people don't pay taxes or don't comply with the laws, the system cannot run, the economy cannot run without taxes, the government cannot run. So they wanted to collect the tax as early as possible so that there will not be any delay in collection, so that there will not be any economic instability due to non-collection of taxes. Otherwise, the government need to go for borrow money from outside the country, which will again have a different impact on the economy. So they introduced the tax deducted at source or withholding tax. So they try to collect as and when the earnings are being done. So these are the charging sections which empowers the government to collect the tax as and when the earnings are being earned by the company or any individual or any person who is earning the income. And these are the various sections. This has been broadly covered by Ramakrishna. I'm not going in depth into. So to have a glimpse of these things, there are 3 slides of sections which is covered under the 192, 193, 194, 196, 195. Of course, 195 is one residual section for specifically dealing with other sums to non-residents. So from 192 to 196, you remember all these sections are the charging sections for tax deduction at source. Specifically, I highlighted 2 sections, 194Q and 206C. A similar transactions which are charged, which are the deduction has been introduced at various point of time during the last financial year. We will see in depth what is those, which one overrides which one, that also we will see in detail. So when it comes to Salary. Previous speaker has covered entire salary. All other sections, we will have a small intro on those things. Kindly go and study each and every section. The sections are amended frequently. Changes are happening. That is why I have not put specifically any threshold limit or the rate of tax. Otherwise, you will take this slide as a reference slide. That is not a proper way of dealing with TDS, because whenever you deduct TDS on a monthly basis, go and refer the section, what is the applicable rate, what is the threshold limit, then deduct it and then go for remittance and other payments. So when it comes to section 193, it is interest on securities. Any company which has issued securities is paying interest on securities, they will deduct on 193. And when it comes to dividends, it is section 194. And 194A is interest other than section 190, that is other than interest on securities. So a private limited company, whether lending can be done or not, that is something different. If it accepts an amount and pays an interest on any amount it has taken as a loan. So for example, you can take any loan taken from financial institution by private limited companies. It is subject to 194A. They have to deduct, say, Bajaj Finance Limited or some vehicle finance, they have obtained some loan. On that interest, the private limited companies are liable to deduct a TDS under 194A. 194B, 194BB, lottery, crossword puzzle, horse race, all these speculative transactions, I think. 194C, contractors, this is a very wide section. Kindly read what are all the various parameters on which this 194C applies. If you want to cover the entire TDS, it has to be worked out. We have to conduct a workshop for 4 or 5 days. Then only at least 50% of the entire TDS can be covered. But we try to complete it in an half-a-day seminar so that you will have some idea. It is just an eye-opening so that you can go and read. Most of the time, when we don't read a section, we don't go into some subject, we feel it's something that is very difficult. It is not so. The section numbers are huge. It seems to be complicated, but it is very simple. Don't panic with the TDS. TDS is a very simple thing which we can learn very quickly. So contractors, 194C contractors, there are certain principles you have to understand. So Ramakrishnan has told you that there is non-corporate deductor, corporate deductives. What is the non-corporate deductive and corporate deductive? So why there is a distinction? So tax is being collected for corporate deductive, it goes to some other head through which the central government bifurcates the tax to the various states and other things. When it comes to non-corporate, it is something different. For their convenience, they are collecting the tax at 2 different heads. Remember that there are also differences in tax rate when it comes to corporate deductives and non-corporate deductives. So for the purpose of these things, you have to remember who is a corporate deductive, who is not a corporate deductive. When deducting tax under 194C or any other section, you have to find out whether to whom we are deducting. So deductor is the person who pays the amount and deductee is the person who receives. So contract, I am a XYZ company, giving a contract to ABC. So while paying to ABC, I need to deduct TDS based on the percentage and based on the section. So if that ABC is a corporate, if you take an example of 194C, then it will be a 2%. If it is a non-corporate, it will be 1%. So whatever the percentages or whatever the deduction things I am saying, no, don't take it as it. Go and refer the section. At times I may say it as a wrong value also. Go and refer the section. That is the way we have to read the sections for TDS or any other taxation matters as such. 194D is insurance commission. This is for insurance commission agents. They receive insurance commission. For that, insurance companies deduct under 194D. And 194DA, life insurance policy. If you receive any amount from life insurance policy, say a survival benefit or any other benefit, they will deduct under 194 DA. And for non-resident sportsmen or association, then 194E, 194 EE for NSS payment, 194F repurchase of units of mutual fund or UTI, 194G commission paid on sale of lottery. Anybody is selling lottery and is receiving commission, that person who is receiving the commission, the person paying will deduct on behalf of the receiving person under 194G. 194H commission or brokerage, 194I rent. Most of you would have seen this 194C, H, I, J, C and all. These are all common sections which will come across on a day-to-day basis. 194IA, this is a transfer of immovable property other than agri land. This, let us go in depth in this 194IA. So let us consider a person is selling a land or a property, immovable property, X is selling to Y. So when X is selling to Y, Y is the buyer of the property. To whom the capital gain will arise? Who is liable to pay tax on capital gain? X or Y? Anyone can answer? Seller of land is liable to pay the tax. Okay. If he was liable to pay, who will then deduct the tax for him? The buyer, of course. So the buyer has to deduct TDS under 194A for the seller. In this section, when you compare to other sections, all business units or most of the business transactions will be covered. This is one peculiar transaction which is coming for non-business associates, where you will not find any tax deduction on account number. There is a specific section which asked for any person who is liable to deduct TDS under various sections has to compulsorily apply and get a TAN number or tax deduction account number. There are few sections which exempts that, 194 IA, IB and some other sections, 206 some sections are there, where you have some exemptions. You need not have a tax deduction account number. So when it comes to 194 IA, when TAN number is not there, then how you can deduct a TDS and how you can file a quarterly return. So those who know the TDS, you deduct TDS for the month and remit it in the subsequent month before 7th. That challan you mention in the quarterly return, and also for the challan to whom you have deducted all these details you mentioned, and on a quarterly basis you file a return. But when it comes to transfer of immovable property, there is no concept of quarterly challan. So what the department has done is they have introduced a challan come return. It is 26 QB. It's a challan come return where you file all the particulars of the person as well as the tax deduction. What is the TDS which is being deducted on the particular sale transaction. So 194A YA covers both this form 26 QB, which is the challan come return. You have to remember this is a challan come return. So when we, I'm not going in depth and showing you how the challan is being to be generated, but I'll give you a brief wording on how to do it. If you go on to the same altas where you have seen the TDS payment challan 281, if you drop down there, you can see 26 QB. You select that, it will ask for all the particulars. Once you have done that and you, when you pay that, you will be given a unique ID number which you have to get it noted down, and that is the number which you again key in and download the certificate of the 26 QB. So remember, whenever you pay this 26, any tax challan or tax payments, you finally go through each and every step and see to that any pop-up window is been which is enabled and it shows some instructions or messages. You kindly take a screenshot or kindly note of what the message says about it. So these are all important things you have to remember when you pay to 26 QB. Similar thing is with the 194 IB, which is rent. Normally 194I covers for payment of TDS on rent. And when it comes, that 194 is I is applicable for tax audit cases. That is the persons who are subject to tax audit in the previous year, that 194I will apply. This 194IB is expanding the scope of TDS on rent. So wherever there is a rent payment, even for non-tax audit cases, when the rent payment exceeds 50,000 per month, then this 194IB will apply. Here also there is no requirement of TAN number. You can use the specific challan come payment option. This is 194IB. So 194IC, payment under specific agreement, section 45(5)(a). These three sections have specifically given a gap. These three sections normally deals with immovable properties. One is sale of immovable property, one is of renting of immovable property, one is under payment under specific agreement, section 45, which deals with capital gains. 5A subsection deals with some specific agreements. When there is a there is no transfer of immovable, there is no sale with respect to sale agreement or sale deed will be registered, and there is an agreement. Based on agreement, there is a transfer of property that deals in section 45(5)(a). If section 45(5)(a) gets invoked, then you have to deduct TDS under section 194IC. So next, coming to other section 194J, professional or technical services. Again, this is this professional or technical services, these wordings, this will have a great impact when you combine with 194C. What is a professional or technical services? Again, go and read through the sections. There are few complications. Most of us will confuse with 194C and 194J. There are specifically, they have sent what is a profession, what is a technical services, other than which is falling under professional or technical services, will fall back to 194C. 194K, income in respect of units, and LA, LB, LBA, LBB, LBC, all these things I leave it because all these things are we will seldom see in our day-to-day efforts. All these things are with respect to various income from business, trust, investment fund, securitization transactions. All these things are I leave it as such. And when it comes to 194M, this is some a unique section which is a residuary section, again which is in turn with 194IB, which is dealing with rent, 194I and IB. Similarly, 194M, which is a residual payment of certain sums other than 194C, D, H or J. So anything which is not falling under these sections C, D, H or J, which has an exemptions, specifically 194C will talk about type of assessors to whom it applies, what is the threshold, all these things. If those things are not applicable, then it falls back to 194M. And again, this 194N, all cash transactions, the government is discouraging a payment in cash. They don't want anything to be done in cash, or everything has to be in a digital format. So 194N specifically for banks. So banks will deduct if cash deposits or cash slips payments are more than the threshold limit, they will deduct under 194N. And 194A, e-commerce operator to e-commerce participants, 194O will apply. And 194P, this is a new section, payment to specified senior citizens. This is for specified senior citizens 75 years and above who have pension income and who have only interest income. The bank will deduct TDS, and that is the only thing they have to do. On all other things, the deduction also is not based on any percentage, based on the income of the particular person declared the specified senior citizen. The bank will deduct the TDS, and again once the TDS is deducted, the senior citizens are exempted from filing returns, or so that this is a new section 194P. And 194Q, purchase of goods. This we will see along with the sale of goods in 2061H. 194R, benefits or perquisites with respect to business or profession, and any transaction which is having any benefit, specific benefit or perquisites in a business or profession, then 194R will attract a specific rate of deduction of tax. These sections, when it comes to OP, QRRs, are all new sections. Try and read these sections, because for the purpose of your examination and purpose, since it is a new section, you have to be careful in dealing with these sections. 194, yes, again a transfer of virtual digital asset. 195, other sums to non-residents. When it comes to 195, it is a simple section which has a few lines, but there are other complications in 195. Those who have been dealing with Form 15 CB will know that this section, deduction under 195, will have a parallel effect when it comes to double taxation avoidance agreements also. So what is applicable under DTA and what is applicable under 195? And there are other few sections also which applies for non-residents. You have to, in tandem, you have to read all those sections and the reduction rates. So if there is a DTA, you're going to deduct TDS and the double taxation avoidance agreement, then that rate will prevail over the income tax rate. So kindly refer DTA when it comes to non-residents, particularly with respect to non-resident companies. Okay. So this 196C, there is a A, B, C, D, all come from units, non-resident income from units, foreign currency bonds, foreign institutional investors. These are all 196C, 196 section deals with. And this is what the around 80 sections are there, 80 things you have to remember in the tax deduction at source. And similarly, when it comes to tax collected at source, so they wanted to have a even more revenue generation. They don't want to leave touch upon only tax deduction. They expanded the scope of tax deduction at source to tax collected at source. So instead of say in a particular transaction where you pay, so for you it is an expenses you deduct. So when you pay, the other person has an income, so you collect a tax on those. This is what the tax collection mechanism happens. So when it comes to 206C, this first subsection 1 deals with alcoholic liquor, tendu leaves, timber, any other forest produce, scrap, minerals. The first they introduced this section in order to grab transactions which is otherwise not been captured in income tax returns. Most of these transactions, most of these alcoholic liquor sale, timber sales, any tendu leaves or any mineral extractions, all these transactions, those who deal with all these transactions do not file income tax return or do not file a proper income tax return. So they wanted to capture all those details. So they introduced this tax collection as source. Similarly, they expanded the scope to parking lot, toll plaza, mining or quarrying. Then again, they wanted to have a check on the sale of motor vehicles. So they introduced 1F where the sale of motor vehicles greater than 10 lakhs. Now you could have seen in assessees where we have bought vehicles more than 10 lakhs. Most of the say mid-level cars are more than 10 lakhs. Most of the cars which has been sold, they would have collected tax at source for those assessees. So then that transaction will come into the income tax purview so that they can catch all the missing transactions. That is the intention of the government here. Then comes the 206C 1G. This is another peculiar section they introduced. Two things they are taxing under 206C 1G. One is liberalized remittances, another is tour package. What is liberalized remittance? Under the norms under RBI, Reserve Bank of India gives permission to remit any amount outside India to any person to a certain threshold limit under these terms. So there were payments remittance being done to various persons. So they wanted to find out, or they wanted to curb what is the amount of remittances going abroad under the terms, whether that particular person who is remitting as a source of income which is subject to tax in India. Say one of the assessee sends his son to abroad for higher studies. He is remitting 10 lakhs or 20 lakhs for his higher studies. Government wants to know whether that particular assessee has earned or as a source of income which is subject to tax. It may be subject to tax, it may not be. There may be agriculturist whose income is not subject to tax who would have sent his son abroad, but they wanted to find out what are the transactions, whether it is subject to tax or not. So they introduced that sections wherever the remittances going abroad for these kind of transactions, they have to, the authorized dealer will deduct TCS on those transactions. So the transaction will come under the purview of income tax, and any person who is filing their income tax will claim that is a refund or adjustment against tax liability. Similarly, for tour packages, if you're going for a foreign tour, the tour package operator will collect tax on that particular transaction. Now comes the most common thing which has been affected now, 206C 1H. And this 194Q and 194 206C 1H, purchase and sale of goods. When these transactions, the first criteria for this transaction is the assessee should have a turnover of 10 crore and above in the previous year. Both these sections are similar on that line. So if the assessee has a turnover of 10 crore in the previous year, then this section will apply. And for all transactions which is being made for a particular person, so that assessee is making a transaction from another person, either purchase or sale of goods, above a threshold limit, it is a 50 lakhs rupees. If that is the limit, then these two sections get triggered. So once these sections are triggered, let us see. So I am a person is eligible assessee. Say my previous year turnover is 10 crore above. I am purchasing a goods from another company on in the particular year more than 50 lakhs. Then I need to deduct TDS under 194Q for the purchase of goods. So here my liability comes under 194Q. So once this is triggered, this 206C1H will automatically get eliminated. So 194Q will prevail over 206C1H. Let us see what is 206C. I am a person not coming under the 10 crore limit. I am purchasing from the other person. The other person has a limit of 10 crore and about turnover in his previous year. So he is selling the goods to me. So for more than 50 lakhs, I am purchasing it from him. Then he will collect TCS under 206C1H from me, from my sale transactions. So when both of us are in the more than 10 crore limit, in that sale transaction, 206C1H will not apply, but 194Q will apply. So 194Q will prevail over 206C1H. Kindly remember this. This is one thing you have to remember when it comes to 194Q1, 206C1H. And let us move into the return parts. These are all the quarterly returns or various returns for the TDS and TCS returns. 24Q salary we have seen here. 26Q is for other than salary. 27Q for non-residents. Any payment made to non-resident for which we have directed TDS, say under section 195 or any other sections, then it will 27Q will apply. I am not giving you the due dates for payment of filing of returns and all. We will not go into that. That you check what is the due date for filing various quarterly returns. 26QB, again I told it is a challan come statement for 194 IA. 26QC is for 194 IB rent. And 27EQ is for TCS. So whatever the TCS returns, no, it has to become under 27EQ. These are all the various quarterly returns, except 26QB and QC, others are quarterly returns. So let us see how the flow so TDS return. You have to prepare using any software or the departmental utility, which Mr. Ramakrishnan showed you how to use the departmental utility. This is the first process where you get the return prepared and the FEU file generated along with the form 27A, which is nothing but a physical form which you have to submit when you file the return with any e-return intermediary or with any TIN NSDL centers. Two options are again available: offline filing and online filing. Offline filing, take the FEU file in your any CD or a pen drive, along with the signed copy of the physical copy of 27A, submit to the e-return intermediary. They will file you and give the acknowledgement. This is the old method. Till now it provides. There is a simple online filing. You prepare the return, upload the return through your TDS login in income tax portal. Have anybody has filed TDS return through income tax portal? Yes. Well, this is the simplest method when it comes to filing TDS returns. Let us see how we can file it through the income tax portal. So you need to create a TDS user ID in income tax e-filing portal. So if you go to the incometax.gov.in register user, there comes the TDS tax director or tax collector category where you can select and create a user ID there as you create for a PAN. Once you have created the user ID, then you have to log in to the particular assessee's income tax line, that is the PAN login. There in the work list, you will get the approval, then it has to be approved there. So you can have multiple TAN for one PAN. So this is what process. Say one PAN number, it is a PAN number is PAN India, same number. You will have multiple branches. Each branch can have a different TAN number. So for each TAN number, you can have a different user ID. Each the different TAN number have a different user ID. Then that can be used for filing. So to authorize that, that has to be approved using the income tax login. Once it is getting approved, you can file that TDS return through that income tax e-filing portal using the TAN login created in the first step. And this is what the traces or TDS reconciliation analysis and correction enabling system or CPC, centralized processing cell, we call it as. Simply we will call as a traces. This is what, remember, this is the website where we can do corrections, any demands which are arising, we need to set up any demands, all these things. This is the login we go, tdscpc.gov.in. Just I have copy pasted the screenshot how the header looks, the TDS website. We will see what are all the other things we can be doing traces login. Whenever we prepare a TDS return, kindly see to that it is prepared error-free. The more error or more mistakes you make, corrections become complicated. Complicated just not because of the say we do not have any understanding on how it does, but because of the how the system interprets each and every transactions. So once you file a TDS return, the credit goes to the other persons, that it is goes to the 26 days. So when the person claims that particular amount, then correction in your TDS return will not be a possible thing. So you should be very careful when you pay the TDS amount. Then the TDS amount is lying in your TAN number only. It is not allocated to any third person. Once you file the return, once the return gets validated, the amount you have paid through the challan goes to the respective deductees. So it is simply that you're paying a check or RTGS or a NEFT transaction you are making to the other person. Once your transaction has been completed, getting back the money from them, it is a difficult. That is what the correction process in TDS as such. There are different errors that may creep in. Number one error most of us do is wrong mentioning of PAN number. So before any TDS return is being prepared, kindly check the PAN number using the tax payment challan option and see whether there is a valid PAN. You can also using NSDL facility, they charge some amount. You can avail that facility and check multiple PANs whether it is valid PAN or not. And if you're using any softwares, most of the softwares check whether the validity of the PAN on an online basis, and they will throw you whether it is a valid PAN or not. And they also show you what is the name as per PAN also. So you have to validate the PAN first. Next is you have to check the challan properly, whether the challan is proper. When it comes to challan, I wanted to supplement Mr. Ramakrishnan's thing, and also you have to also remember, you pay the challan under one section, say 192 or 194C or 194J. It is not mandatory that same section the deductives should be there, or you should use the same challan for the particular section. It is been done away with a few years back. Before that, you have to make it. Otherwise, you have to go back and with the assessing officer go and correct the challan. All those things were happening, or you have to correct in the banking system. All these things have been done away with. So anything, say you have paid a challan under 192s, that is salary, you can use that under 194C or 194J. That is possible. And also you can use the challan for 1 quarter. If you have a difference amount, say you have deducted 10,000 rupees, 5,000 you have adjusted in Q1, balance 5,000 you can adjust in Q2. That is also possible, mentioning the same challan in the subsequent quarter returns also. But you should be very careful that you are not claiming any excess amount in the challan. So 10,000 means that 10,000 exactly should be consumed. You should not consume more than what the challan is. Then you will get an error in the processing of the return. Kindly remember this. This is one thing I wanted to mention. So challan allocation can be done under various sections. And when it comes to salary, I also wanted to have a word that the gross salary, what you mentioned in all the 4 quarter returns, should tally with the Form 16 gross amount. It may be, the Form 16 gross amount may be higher, but not lesser than that all the 4 quarters. This normally happens when there may be, when you deduct some amount, you mention the gross wrongly in 1 quarter, and this was not previously cross-checked, but when you file the income tax returns and if you go for TDS corrections, these errors also appear now. So kindly check to that what is the gross amount you mentioned on each month deduction agrees with the amount with the Form 16. That is the, in Q4 you will mention the Form 16 details. You capture all the Form 16 detail in Q4 return. So when you come to all other returns, the salary return is unique, where all the 3 quarters will be similar. 4th quarter will have an extra column which will ask for all the salary detail for all the employees. So remember, both the things are agree. And now when you log into the traces, this is the dashboard you see in traces. So this will have all the particulars, what are the returns you have filed, the count of corrections, processed statements, any default short deductions, short payments, interest dues, everything you can see in this dashboard. There is also a scale which is representing in which category your the deduction is, whether it is bad or it is good. So if it is bad, that means whatever the returns you have filed is not up, correct, and there are irregularities in your returns. So this is how the scale will appear. So you have to be very careful in filing returns. If the return is proper, now you can see that it is it will be good will be there, and you will see the various status of the returns also, whether it is filed, processed for 26 years, processed completely, default is there, rejection is there, not filed. All these status you can file in the see in the dashboard. So you can have a quick link. There is a left-hand side, you can see quick links where you can see challan status. You can verify the challan status. You can request for a justification report. You can request for consolidated file. And can anybody say what is a justification report and what is a consolidated file? So before seeing that any answer on that question, one of you have asked that excess TDS paid can be adjusted in subsequent year or not. Yes, you can adjust in subsequent year also. Even if you mentioned wrong assessment here, that can be adjusted. The quarterly return doesn't validate those things. Only thing, the surplus amount or the unadjusted or unconsumed amount should be available in the particular challan. Coming to this question, what is a justification report and what is a consolidated file? Yes, Ribu. Anyone else? So let me continue. If you file the return, there are errors in the return. So you will get an email saying that there is error in the return. So if you wanted to find out what is the error, exact amount of error, what is the amount involved on all those things, you have to find. Request for a justification report, which will contain the detailed analysis of the errors which has been there in your return file. Once it has been downloaded and you identified the error, you wanted to rectify it, then you have to download the consolidated file. Consolidated file is nothing but the accepted file what based on the FEU which you filed. Normally, why this has been introduced, I'll give you the brief background of this. Previously, there is no consolidated file rectification. So whatever the FEU file we generate, the same software we use that FEU file to rectify the errors and we file again. What it happens now when the FEU file and anybody has opened, it is a text file with a different pattern. The initial lines will have the challan details, the subsequent lines will have deducted details. It is a text file. If there is any change in the say arrangement of these lines, then the correction process becomes difficult. There have been changes. So you shift from, say you generated a FEU file on one software, then you rectify it in using some other software. Then when you file it in the portal, there were some errors being, they are unable to match with exactly what is the rectification done. So department thought that it is will not allow rectifications based on the files which have the assessees have. So for rectification you have to request for consolidated file. So the consolidated file will have a similar pattern. In that pattern only, that rectification you have to make. So again here, when it comes to rectification, there are different things you have to remember. A challan, once accepted challan, can it be rectified? Can anybody answer? Whether a challan can be rectified? So I got an yes answer for challan rectification. How can you do that? You have challan number A, say BSR code so and so SIN number is something. Say I call the A as SIN number, and you have allocated that A SIN number, the A challan to different deductees, say X, Y, Z. So there is an error in this challan. The challan A is not available, or challan A has something, some errors or some amount is being, there is an issue in some amount, or you wanted to change that challan, all these things. So if there is no challan, you can completely replace the challan with a different challan. If the challan details are there. If there is some particulars which wanted to change, a deductees which wanted to say in a particular challan you have entered, you used it for Q3, which is supposed to be used it for Q4. And previously what it was done, when there is a cannot use challan for different sections. We used to delete entire deductees, then we will insert another challan, we will attach all those deductees to the new challan. This is what it can be done. So similarly, when you go to online corrections also, there are two methods of corrections. Certain corrections may be done in online. Online corrections can be made only if there is a valid digital signature registered under the traces login. You can do for online corrections. Offline corrections, you can download the consolidated file, correct using the software. Either you can upload using the online facility or file with the NSDL. That can be done. So once these corrections are made, so say you have demand for interest due to short deduction or due to some late deduction, or you have an interest, or there is a late filing fee under 234E, there is a demand for that. So you can go for that in online correction where you can pay using some challan, and all these default amount can be mapped to the challan. That can be done using online. So we will see certain online options which are available. So this is one option where in the statements or payment section, you will see different options. One is the statement status. Another is challan status. Another is challan status for statements. View TDS or TDS credit, PAN verification, request for consolidation. This is lower deduction. If somebody is giving lower deduction certificate, you can validate here. Request for refund. If you have paid any sum in excess in any challan, you can request for refund here. Then you can track that refund status. And declaration for non-filing of statement TDS returns. Lower deduction declaration. Voltas challan correction, if any correction is required. This is of course not necessary, since you can map any challan to any deductee. This is normally not required, but certain sections, if you wrongly have mentioned, say you wanted a deduction which has been made for under say 194C, that has to be actually under 195. Then these kind of corrections you can request for Voltas correction, challan correction. To track that, you can track these corrections here. These are 26A and 27BA, that is the forms which has been requested and generated here. You can download. This is what the various options and available under statements or payments. So now let us move to how to check this challan status and the various things. Whenever you go to any of these menus, it will ask for different details. This is what it will ask for: the form type. It will ask for the form type, financial year, quarter, token number. This is nothing but the receipt number which you, when you get when the file your TDS return. And you have to select one challan, and you also mention what all the directives. So this is for the purpose of validation whether you are properly selecting the particular challan, because they don't want to mess up with details, because all these details, whatever you capture here or you do corrections, no, it directly affects the 26 years of the other persons. So they are very careful in validating all these things. They are asking for all these details. Once you get all these details, no, say now I wanted to correction Voltas challan correction, it gives a checklist. Then once you find out this is all things which can be done under Voltas challan correction, you proceed. Then it will ask for financial year, all these things. Then it will ask for section, say your correction for section 1 code 195 to other codes or vice versa will process to jurisdictional assessing officer approval. Say this is, they don't want it to mess up with this non-resident deductions. So whenever you make corrections into non-residents or vice versa, it goes through the jurisdictional assessing officer's approval. Then you have to go to the jurisdictional assessing officer for validating that correction, online correction. Other corrections can be done through online. Mostly, as such, we can tag anything, so there is no requirement for correction. So the next menu is the default menu, where you can find what is the default summary, request for correction, a request for a justification report. This is what the detailed report you have. Summary, default summary you can have here. Request for correction, you can go for online correction. Track correction. So this is what online correction. And this is for the entire detailed report of the errors you get. The correction status requested. What are the statements? If you make any online correction, saved statements, you can see here what is the status of those things. And once the corrections are ready, what is the things are ready for submission. This is for the tag replace challan. So if you have wrongly tagged any challan, you can replace that challan with some other tag. Say whatever challan replacement you wanted to know, you can do here. So you can track that. These are all additional functionalities they have been introduced after various correction processes that has been done to various years, say 10 or 15 years, what they have done. They have introduced this challan replacement to simplify the TDS process. Any doubts so far? Whatever you're seeing here, most of you may not have been able to understand how it
Sir,
works.
there is a doubt somebody has asked in the chat box.
Yeah, that is what I have already addressed, that it is the difference between justification and the consolidation file report. Again, I'm saying justification report is a detailed report which says what is the errors in your particular quarterly return, TDS quarterly return you have filed. And consolidated file is nothing but whatever the quarterly return you have filed, the file as in the TDS traces website, it is getting downloaded, which that is the file you are going to use it for correction. You cannot use any other file. That is the base file which you download, then upload that file in your say departmental utility. There is a TIN correction utility which has been, you can download from the TIN website or any other software. You use that consolidated file, get the details as in the traces, then make the necessary corrections. Say some PAN number is wrongly mentioned, you can make that corrections. All those things you can correct. Then generate the fresh FEU file, that is the corrected FEU file, then upload it to the website, either online or offline. That is what the consolidated file. Any other questions?
Sir, good afternoon. I have a doubt.
Yeah.
First of all, I thank you for explaining the TDS so far. See, my doubt is, after filing the TDS return, supposing we are getting a short demand or short payment notice, does that mean that until such time we make the correction of that short payment, short deduction, the deductee won't get the credit of TDS?
No, if you say short deduction, say a company deductee 2% 194C deduction has to be made, but you deducted 1% only, and you have remitted that amount, you have filed your return also. So in that cases, you will get a short deduction notice. So when you get a short deduction notice, you can download the consolidated file, pay the difference file in a different challan, tag that, insert the challan in the particular rectified return, adjust the difference in the particular file, and then you can file the revised return. Then the amount, the short deduction amount, will reflect in the 26 AS of the particular thing, so that the enhanced amount will get reflected in the 26 AS. So if you go for an online correction, you can make the similar thing in online, where you can tag whatever the short deduction amount is being reflected. You can pay using a challan. Once the challan gets populated in traces website, normally it will take 2 or 3 days to appear in your traces website. So whatever payments you make using TIN, the tax payments, It will take some 2 or 3 days to appear in your traces website. Wait for the time. Once it appears, you can go for that short deduction. You can adjust that short deduction to that particular challan. What it will happen, no? Kindly check whether when you do this kind of online deduction, when you adjust for short payments, normally go for this consolidated file and go for corrections. Then you will have a track on what is the corrections and made, and you can also check whether the amount, short deduction amount, which has been properly transferred to the deductee, that you can have a track. If you go for an online correction, you have to mention the short deduction, to whom it has been short deducted, and whether that PAN number, all these things you have to type it manually, and you have to tag it properly so that the amount goes to the particular deductee. So you should be very careful on when you do these kind of corrections. Once it is getting populated in 26 AS, that 26 AS, that person files an income tax return, then you cannot get back that amount. So if it is been consumed like that, till that, no. So always try to see to that whatever returns were filed in Q1, Q2, and Q3. Check all the values, whether it is properly reflected, properly deducted, and then you file the Q4. So if any short deduction are there, you can make corrections in Q4 itself, so that within the financial year, if you do any corrections, then there will not be any problem in the corrections getting validated. So otherwise, the TDS corrections return you file, that may fail. So multiple corrections you will be making, and it may be rejected for multiple times. You will not know the reason and all those things. It is mainly because when it goes and sits in the 26 years of the other party, most of the corrections will not happen. If there is a very wrong mentioning of PAN multiple times, so I think there is some restriction. 1 or 2 times only they will allow you to correct. All those things are being made. So always it is proper for you to file it in a proper manner. So corrections will always be a difficult task. You have to understand what is the exact mistakes you have done on seeing their request of justification report. The justification report will show you what are the errors. Read the error and understand what the correction has to be made to rectify that error. So if there is a say demand due to short deduction, then the short deduction has to be properly adjusted. Otherwise, no short deduction you will pay. The credit will not go to the other party. So all otherwise there will be an interest. So normally interest tag, you can do it online. If there is a delay in payment of TDS, or from deduction to payment, or there is a delay in payment after 7th, all those things, when there is an interest is been raised and demand has been raised on in the default summary, that you can pay in any challan, that you can correct in online, because it is no way going to affect any other 26s. It is just demand which has been due to your late deduction or a late filing, say 234E late filing fee, that you can pay and adjust in an online mode.
Okay, sir. It's like if for example, if I paid, if I've deducted 1% instead of 2%, and there is a demand from the TDS portal saying that I've made a short deduction, I have to correct it before 31st May so that the deductee gets the proper credit, right?
No, you can also correct it afterwards also, but the credit will go only afterwards.
Okay.
It is not that if it is an excess deductions and you have to take back only, you have to see to that you are taking back before the filing of the other party. Okay. So if it is say 31st May, before 31st May, or that other deductee has filed his income tax return and claimed that entire TDS amount, then the excess deduction you cannot take back. So there is only catch on that. But if it is a short deduction, you can always transfer the amount to the other person. Only thing, if the other person has already filed the return, then it will be for him difficult in getting that refund amount. He would have paid the tax from his pocket, and getting this refund, filing a revised return, getting refund will be a difficult task. So that is why I've always advised to, whenever there is a corrections due to short deduction or excess deduction, make it sure that you do it before the year end, so that the proper tax credit goes to the deductee in a proper manner, so that there will not be any subsequent corrections getting rejected.
Okay, sir. Thank you. Another doubt is like during this quarter, when students were filing the TDS return, usually the FVU file goes into a zip folder, and then we make an online filing in the TDS income tax portal. But this time it was saying that the FVU file has to be changed to an Excel format or PDF format before filing. I don't know whether other firms had the same problem or how it is. How should I deal with it?
FU is normally it is in zip folder. You have to upload it in the income tax portal. That's it. There is, I don't think any other changes happened as such.
Okay. So I don't have to change it to Excel or PDF format. I have to put.
No. It is not required.
Okay. Okay. Thank you, sir.
So going back to the Traces website, there is a download section where you can download Form 16, Form 16A, and Challan status inquiry CSI file also you can download from here, the Traces website. So once you request download, it is I don't see any justification in when you select a download, it lasts for so many parameters, then only it will allow you to download. Why this is a cumbersome process, I don't know, but still we have to go through this. So it will ask for, if you say ask for Form 16, it will ask for financial year, PAN numbers. So all it will ask for some PRN number, that is the TDS return filing data. All these things you have to fill in, then it will only it will a request for a download will be entertained, and once it is request is there, after few hours or sometimes few days you will get the download available for you to download. This is what the normal process, and such if you it is available for our download, you have to again check with the website. You will not get I don't think any intimation is being received in mail. At times we may receive, but most of the time you have to check the Traces login and find out whether the request you have made for download is available for download. This is what the process with the TDS or Traces website as such. For healthy maintenance of TDS, kindly check the dashboard often to find out any discrepancies being matched. There is also a mail section you can see in the dashboard. There is an inbox which will have what are all the various new things. You can also see the inbox with 4 new messages in this particular screen. So you can see these messages. So whenever anything if you are not receiving any mail, this is where you have to check all the errors or rectifications or any download which is available. All these messages will come and sit in this inbox. So check this inbox and frequently and see whether what you have filed is in the correct manner. Any other questions? Somebody has asked for suggesting any softwares. As such, I don't want to recommend any particular software in this a public forum. Each and every software has some unique features. Depending on your requirement and depending upon your complexity of the various stages, you can select any softwares. And there are almost most of the TDS software has common features. A few things will be the menus and user interface will differ from software to software that you can use it. The return preparation utility, of course, it is somewhat uh, a little bit difficult, but when it comes to filing a proper return, a valid return which has no errors and everything, the RP will be the best option. And also I'll recommend RP to be used when there is a number of transactions are very less. The transactions are more, you deal with more deductees or more number of challans, then going to any software will be a better option. Any other questions?
Sir,
Yes.
I have a doubt, sir. Can I speak in Tamil, sir?
Yes. Yes.
Sir, ஒரு இன்ஸ்டன்ஸ்ல வந்து 194C இண்டிவிஜுவலுக்கு நம்ம டிடிஎஸ் பிடிச்சிட்டு டிடிஎஸ் ரிட்டர்ன் ஃபைல் பண்ணியாச்சு சார். ஆனா வந்து சலான் பே பண்ணது வந்து கம்பெனி அசோசியேட் பே பண்ணியாச்சு. அதனால வந்து ஷார்ட் டிடக்ஷன் அப்படின்னு சொல்லிட்டு வந்திருக்கு சார். அதுக்கு என்ன சொல்யூஷன் சார்? ஆனா 1%க்கு 1% தான் நம்ம டிடிஎஸ் பே பண்ணியிருக்கோம்.
இல்லை அவங்க பேன் நம்பர் என்ன இருக்குன்னு பாருங்க. இண்டிவிஜுவல் பேனாக இருந்ததுன்னா 1% பிடிச்சிருந்ததுன்னா ஷார்ட் டிடக்ஷன் வராது.
இண்டிவிஜுவல் பேன் தான் சார் போட்டிருக்கு. ஆனா வந்து சலான்ல வந்து கம்பெனி டிடக்டிவ் அப்படின்னு சொல்லிட்டு கொடுத்தனால அப்படி வந்தது.
சலான்ல வந்து இருக்கிற இது வந்து வெரிஃபை பண்ணாது. இப்போ சலான்ல வந்து என்ன செக்ஷன் என்ன டைப் ஆஃப் டிடக்டிவ்ஸ் அதை பேஸ் பண்ணி வந்து வேலிடேட் பண்ணுறது இல்லை. இன்கேஸ் நீங்கள் வந்து எல்லாமே கரெக்டாக இருக்குது அதுதான் ப்ராப்ளம் அப்படின்னீங்கன்னா நீங்கள் சலான் கரெக்ஷன் ஆல்டாஸ் அந்த ஆன்லைன் கரெக்ஷன் ஆப்ஷனில் போய் அது சலான் கரெக்ட் பண்ணலாம். என்னுடைய நாலேஜ் படி நீங்கள் வந்து சலானில் வந்து கம்பெனி டிடெக்டிவ்னு போட்டு அது நான் கம்பெனி டிடெக்டிவ் யூஸ் பண்ணீங்கன்னா ஒன்றும் யூஸ் பேன் நம்பரில் பாருங்கள். பேன் நம்பரில் வந்து அதர் தன் இண்டிவிஜுவல் அண்ட் ஹெச்எஃப் இருக்கான்னு பாருங்கள். அதர் தன் இண்டிவிஜுவல் அண்ட் ஹெச்எஃப் இருந்ததுன்னா அது நீங்கள் 1% பிடிச்சிருந்தீங்கன்னா ஷார்ட் டிடக்ஷன் தாங்க. நீங்கள் அது மட்டும் தான் ப்ராப்பராக செக் பண்ணணும். பேர் வந்து இருக்கும். சில டைம் என்ன பண்ணுவாங்கன்னா கம்பெனி டிடெக்டிவே வந்து பேர் வந்து ஒரு சிங்கிள் நேமாக கொடுத்துருப்பாங்க. நம்ம இண்டிவிஜுவல் நினச்சிப்போம். பட் ஆனால் அது ஃபேர்மாவோ இல்லை ஒரு கம்பெனியாவோ இருக்கலாம். அந்த மாதிரி சர்க்கம்ஸ்டான்சஸில் தான் ஷார்ட் டிடக்ஷன்ஸ் வரும். செலானில் வந்து நீங்கள் வந்து செக்ஷனை தப்பாக போகிறதுனாலையும் நான் டிடக்டிவ் டைப்பை தப்பாக போகிறதுனாலையும் நார்மலாக வந்து ப்ராப்ளம்ஸ் வரதுக்கு வாய்ப்பு ரொம்ப கம்மி.
ஓகே சார், தேங்க்யூ சார்.
So till such, somebody has asked question, what is the password to open demand request? There are different options that will be used. The password of normally the TAN number in small letters with the data filing, one option they have given. One is the RRR number or the return number which is being used for filing, that is being used. Whatever the file you download, there will be mentioned what is the password to be opened there. Would have been mentioned. TAN number with the data filing, TAN number small letter or TAN number in capital letter, everything is mentioned. Kindly check that message because each and every return has a different methodology they have been using. This is one thing the government has to address, because when we download details using a username and password from the website, why again that needs to be opened with a password? I don't know the sanctity of giving such kind of things. If it has been transmitted through email, then there is a password protection is required, but you are downloading using your username and password and again asking for a password is something which I don't agree with it. But if you, whenever you download, because there is always this question arises to me each and every time, because there are small changes they make. Previously there was a capital PAN with date of birth, now small PAN with date of birth, they got changing it. Kindly refer wherever you done the download section. When you download itself, it will show the password to open as this one. This is the password you have to use, PAN plus date of birth or PAN plus TAN plus the data filing, all these things. Kindly check that and use that for opening the demand request or any other file. So when it comes to 184J, give some time for others to ask for questions. Till such time, I will touch upon this professional or technical services 194J. The professional services, which defines in explanation to the section 194J, says that professional services means services rendered by a person in the course of carrying on legal, medical, engineering, or architectural profession, or the profession of accountancy or technical consultancy or interior decoration or advertising or such other profession as is notified by the board for the purpose of section 44AA or of this section. So this professional or technical services. So for technical services, they are defining in a subsequent subsection. It is wide in gambit. It almost covers legal, medical, engineering, architectural, profession of accountancy, technical consultancy. So you should be very careful when it comes to application of 194J or 194C. This is based on case-to-case basis, and also it is also a debatable one. I may have a different opinion, and some other may have a different opinion, and to properly apply your mind and when it comes to some technical or professional thing, whether it falls under 194J or falls under 194C. And if you don't want any litigation, go for a higher rate of reduction. Always select for 194J, then you will be at a safeguard. There is mostly a safeguarding thing, but when it comes to other partner, the other person may disagree with that. So it is always advisable to check, a double check for applicability of professional technical services, whether it falls under 194J or 194C. And again, with respect to movable property, other than agricultural land, so if this agri land definition, you have to again check for this sale of agricultural land, whether what is an agricultural land, whether it is within the kilometers from the urban area, all those things you have to check. And depending upon that, this 194A IA will apply. And for transfer of immovable property, it is more than 50 lakhs. Registration amount which is more than 50 lakhs. Normally, the section says that it is sale value, that is what is being mentioned as sale value in the sale deed or the guideline value which is used for registration. Both these should be less than 50 lakhs to escape 194 IA. If any one of the thing is above 50 lakhs, say you are registering for you are making a deed for 30 lakhs, but your registration guideline value is 50 lakhs and above, means then you have to deduct under 194A IA for the 50 lakhs or the higher amount which is there in the guideline value. That you have to keep in mind when it comes to transfer of immovable property. Any other question? organizers, do you have anything specifically to be addressed apart from what has been covered?
No, sir. Generally, in the penalty clauses alone, it's rupees 100 per day of delay. So,
when it comes to 234E, it is a provision which is it's more difficult when it comes to TDS itself. So per day, 100 rupee, it goes up to the amount of TDS deducted. So that is what the highest threshold amount. So this per day, it is gone increasing till the maximum amount that is the maximum challan amount that has been mentioned in the particular quarter. Till that amount it will go. So it is always advisable to file within date, or if there is anything missing, you can file it and always revise those return with the additional details. But I don't recommend as such. Try to be as complete, because all these provisions are very clear and it has been time tested. Only thing, we all the assessees mostly, they fail to deduct. When there is a fail to deduct, we keep it in abeyance for filing for the particular deduction to be failed deduction to be completed by filing the paying the taxes. Then we file the return. So instead of doing that, it is a better practices when the failed deduction normally comes to limelight when we conduct an audit. So before waiting for an audit to be completed, if something has been deducted, we can file that particular quarter TDS return. Then we can always rectify for any corrections that may be corrupting due to audit findings. That is one way where we can reduce the 234E penalty, but it is normally when we have a methodological thing, then this 234E can be avoided. And most of the assessees have to educate that this whatever the TDS amount they are paying is not out of the packet. It is the amount that is being deducted from the assessee, from the deductees. It is otherwise they would have paid to them. That is the amount they are paying to the government. And this, if it is not educated, this 234E, and of course the interest will most of the cases, if it is the delay is very high, means this will be more than 2 times or 3 times the tax deduction amount. That is what the actual scenario is. So timely filing of return and timely deduction and remittance to the department will save huge cost to the assessors. That has to be kept in mind, and that has to be reminded in a frequent manner.
that's all, sir. Apart from that, in case anybody has questions, please raise them.
It's on the 194 IEA. So if it is going to be, if the fund is going to be like through banks, right? The owners of deducting the tax, is it on the buyer or on the bank?
It is on the buyer only. The buyer has to deduct the tax, whether it is paying through the banking channel or is paying cash, doesn't matter. So 194 IA, when the transfer of immovable property takes place, the buyer has to pay. Normally, the registration department also now checks for transaction with more than 50 lakhs, whether TDS has been deducted under 194 IA. They also ask for the 26 PB challan for before registration also. So there is a counter check, but most of the registration department asks for this 26 QB challan while registering the document.
Any doubts? Anybody else? Mahata?
Ma'am?
Tilaka, can we conclude?
Yes, ma'am.
Yeah.
Good evening, all. On behalf of Chengalpattu branch, I thank CA Satyanarayanan sir, our branch chairman, and CA Madhumita ma'am, Sikasa chairman, for organizing this half-a-day seminar. I thank our speakers of the day, CA Ramakrishnan sir and CA Anand sir, for taking us to the insight of the TDS portal and provisions. And thank you, sir, for clearing all our doubts. I thank all the students for attending the seminar, and stay tuned for our future events. Thank you, sir.
One more small thing. Students from next program onwards, I'm sure that you're all joining after the link is sent. Kindly register before so that we'll be able to send you the link well in advance. Thank you so much. We can wind up. Thank you.
Thank you, sir.
Thanks.
Sir? Hello. Hello, sir. Sir, Anand, sir.
Yes, sir.
Good morning, sir.
Ah,
End with the
கொடுத்துடலாம் சார்.
Okay, thank you, sir.